Good afternoon. It's Quant Trade Edge. Everything that we wanted to do today has already transpired, so I'm going to go ahead and do the wrap up. And besides, I've got family commitments this evening, but I want to stay true to doing a daily summary. And I'm going to be mixing in the setups for tomorrow with the how things played out today. It's just easier when I'm already on a chart to do that. So starting with crude, there was nothing of note yesterday other than, as part of this Taylor cycle, you've got the day, the topping day, and then on the next day is when we get a Forex trade like we did yesterday. That after a big day, you tend to kind of get that little test down and back up. So in that vein, last night we'd pulled away from the previous day low with a very clean A BC, and this isn't the type of thing that you go for 4x on. You're just going for a marginal new low, and that's pretty much what we got here around 3 a.m. That's nothing great asymmetry wise. It just looked like candy laying on the street, so I picked it up. Moving on to natural gas. Now that's been a very exciting market today. If we start with, let me blow up this 30-minute chart here. We could see that there was very good support right at $6. So yesterday, when we had this pullback, take it down to say 120 minutes, we had a very clean I guess this was a two-legged B, but then a C, and these two are exactly 6.000, $6. Definitely a big option strike, and this was exactly 6 also. Exactly 6, exactly 6. If 6 were to go, that would probably be a problem. So notice that support level. And then today was EIA, the inventory report. And you can usually tell EIA from the range expansion in the bar and also in the volume. You can see there how the volume spiked for that inventory announcement. Now, coming off that inventory announcement, we had a very clean A, B, C. And this part here is the hoagie again, which is why this little wiggle here didn't bother me too much, because it's all within the hoagie. And then using this as your risk bar of about 4.1 cents, you would need 16.4 on top of 15.7. That's about 34. And we got there, let's see, 32.5. No, it took a little bit more to get there. If I'm doing my math right. But we still got to that 4x later in the day over here. Now, this also set up a vol compression pattern in the bigger picture, and I had put that on my Twitter feed live before it broke out. So if you don't follow me on Twitter, that's probably something you'd want to do just to get more timely announcements. We had our ATR3 divided by ATR20 down to 0.588, below 0.70 is our filter. And then, volume is relatively low, maybe not as low as we would love to see it in a vol compression pattern, but it was below the 30 period volume average. And also given that today is inventory day, you would expect volume to be a little higher than normal. So, this was the pattern, and then I believe did I not update it? No, I thought I updated it also when it broke out to identify the risk bar. See if I could figure out how to use this before Elon Musk makes it better for me. There we go. Then it broke out, and this was your risk bar for that breakout, and this it's still holding, and we'll see how it does tonight. But that was a good looking vol compression pattern. And then also just a time of day note, when we finally had this little sell bar, that little red bar right here, if I could draw it in, that is the pit closing bar. Pit closes at 1:30 Central So that is the 5 minutes into the pit close. And again, that's also a reason why you want to always stay aware of the time of day. In natural gas, 6 a.m. is typically important. Let's see, 5:55, 6. So I guess after 6 we had this little move here. Not all that significant today. 9:30 was significant because of the EIA report. Pit close is significant. Again, especially on an EIA day, I feel like there are a lot of participants who get in on inventory day that are just playing the trend for the day. So if the trend is up, they had to get out into the close there. And going back to our daily chart, this little thing here means that is the 7th consecutive close above the 5-period simple moving average. And that is something that Linda Raschke had popularized. It shows a persistence of trend. So, in the past, we got 7 here, got 8, kind of failed. Up here, what you typically get after this run is over is a little bit of a pullback and a retest higher. Same thing here. The trend, this would have been day 7, day 8, day 9, a little bit of a pullback, and then a test back up. It doesn't have to, put forth another leg like it is here, but it has other things going for it right now that are pretty strong. So 7 and above just marks that we are in an outlier move. And when something is happening that quote unquote shouldn't be happening, an outlier move, you typically want to go in the direction of that trend. You don't want to fade it. In a normal choppy market, you would fade extremes. But this persistency of trend is telling you that there is some demand underneath that just keeps buying it every day, keeping the trend consistent. We also had gold today. Gold had a reasonable setup for the Forex trade because we have a PF3. We have the slow line hooked up, we have the fast line hooked up, and the ROC up. We had a lower low, lower high, green candle. So everything was in line for that. The one bit of situational awareness that you would need to have is that we're coiling here within this 240-minute triangle. So, 2x was a better target today than 4x. And, here from the time that we broke the previous day's high, and that happened at 7:05 a.m. So we used a 5-minute here. A, B, C, very clean. And this bar is yet to be taken out. And 2 times your risk would have got you to about 40 and change. Let's see, call it up here somewhere. It's about 2R. And then it's kind of spent the rest of the day going sideways. And again, that's part and parcel with being inside of this 240-minute triangle. Now, I do expect this to break and to break to the upside with the slow line curving up, with the fast line curving up, with the ROC set to be up again tomorrow. We would have another PF3. But what also supports this is silver has a P1 pattern on on the daily chart. So, the aggressive entry would be above yesterday's high, but a more conservative entry would be above 25.11, which is the high from this red candle that is the first bar in the P1 pattern. It's a similar looking wedge, not as symmetrical as the one in gold. But again, gold and silver tend to move together, so watching, one to cue off the other or looking for confirmation from both of them makes sense. What else do we have going on here? So the S&P, it was notable that we ticked down to exactly the previous day low, which was the whipsaw low after the FOMC minutes were released yesterday. And then I like to take this down to a 135-minute pit chart. And let's see here. And you could see how cleanly we got an ABC down from that recent high. Let's see if I can blow this one up. So although, that could be considered a little trappish above there, we've already gotten a pretty hard flush to punish anyone who bought that breakout. And since then, looking at our bar counter, very clean A, B, C. And part of the reason I started doing this video early is when I started doing it, we were just breaking out from this bar here. But markets are fractal. So just like we look for things on a daily time frame, breaking these 135-minute bars is significant. I'm not sure if we got a two-legged pullback or anything. Oh, oh my God, we did. So, if this is the break above the 135-minute, dropping it down to a 5-minute, there's a very clean ABC right here. And this is your risk bar of 8 points in length. So 32 on top of 8 would be, 32 on top of that would be 45.18. So 45.18 would give us 4R on this pattern. And that's been on my list of things to do is, rather than just going with daily bar changes, every pit S&P session has exactly 3 135-minute bars. So the benefit of that is we're symmetrically, symmetrically perfect, so to speak. But also it's all going to happen during the pit session, which is an active session. It doesn't involve monitoring things at 3 in the morning. And you've got ample liquidity in the S&P. So that's an example of the 4x trade playing out on an intraday time frame. And then you can also see from a wave standpoint, it's very clean in that once we've gotten this breakout, good Lord, once we've gotten this breakout here, 1, 2, 3, we're on this wave here. So I still think we'll get to that 45.18. Let's see, it's we've got about an hour to the close. Markets typically don't reverse in the last hour, unless there's some exogenous event. So just keep pushing for that. And then one other thing I wanted to mention, which, I know we don't normally cover stocks a whole lot, but uranium is having an incredible move. We don't really need any of this. But, uranium had a vol compression pattern. This isn't, it's a little bit sloppy because we took out the high of that before we got the compression. But the actual compression came in here, after which we had to move up a flush and now move up. I guess we can add our ATR to look at it. Yep, this is where it was 0.63 down here. This subsequent dip actually didn't get below our level, but that just alerts you to a vol contraction pattern that's going on. And we can see if the volume contracted also. A little bit here for a few days, but not really. But let's look at other names. UEC is another uranium name. And, you've got the equivalent of a vol compression pattern here. This is 0.72. This was 0.65. So between 0.65 and 0.72 in this pattern here. And, volume having dropped here right before the breakout, so before this breakout and this fake out. And that's actually a very tradable pattern. There tends to be a lot of breakout chasers, and in a situation where a breakout should be good, a breakout fake out is even better. But that's UEC, which is Uranium Energy Corp. URG, you're probably seeing a trend here, and they all do trade very similar. But we've got another vol compression type pattern here, and we're breaking out of this little wedge. So not that much. Don't know that many other names. There's one that's not acting as well as the others. URA is an ETF. and it looks a lot like UEC to me, right? It looks a lot like this one, and except this one looks like it has better relative strength. And then there's also URNM, which looks, they all look the same. They're all following the uranium price here, but basically you've got breakouts in that entire sector that should carry on for a while. So looking forward to tomorrow, I would say copper is setting up reasonably. In fact, I can go to my copper homework page. We've on the ROC, we've already had the big move down, and then today is a flip up with a green candle, so that will set up a Forex trade to the upside. Crude, not really. The one thing that is a little scary about this chart is when you have compression like this in the oscillators and price, you tend to get a big move out of it. And my fear would be is that we get a big move to the upside because of geopolitical concerns. But granted, it could be either way. Looking at this 240, we're kind of bleeding out of the bottom of what could have been a symmetrical triangle, but we're also building divergences as we do it. So it's just a little sloppy. If this were a green bar, I'd be more excited about buying above it for the Forex trade, and we still have time until 4 p.m. or whenever that closes, so that'll be on the lookout. Gas, we've started our extended run, so it's just a matter of where you pick your spots. And the indices are set up for a Forex trade to the long side. If we go back here, I don't like the fact that both of these have the same low, because that doesn't, then we've kind of got a hoagie, type situation. So I would probably prefer the NASDAQ tomorrow. If I can find it here, the NASDAQ. The NASDAQ did get a lower low. Oops. Lower low right to that 50 moving average. Very strong setup bar. So that would be my play for the Forex tomorrow. So copper, NASDAQ are the best looking trades. Beyond that, crude, if it can get green, would be reasonable, and then just continue with the power and natural gas and uranium stocks. Anyway, sorry I got a little long-winded. Hope you're enjoying the content. Please drop a like and subscribe. That way we can push this video out to a lot of people, and the more people we get in our community, the better the feedback and comments that I'm getting that's helping me understand things even better than I have over the 20-something years I've been doing it. It's just amazing. Different perspectives really help open up your mind. So please keep helping me push that out and push that forward. And have a good evening.